All right, next meeting of Midnight Discovery, talking about a good variety of things today. Hope y'all enjoy.
All right. So first thing we want to discuss is we're talking about math, and we're talking about how you use math with crypto.
Mm-hmm.
So the bottom understanding of stuff is when people talk about price prediction, and quite often people get on Reddit and all this stuff, where is this going, what's going on,
Yeah,
right?
yeah.
So base kind of knowledge is, if you want to think about it more rationally, use math. So we're talking about market cap versus the total amount of coins, and you divide those two.
Yes.
So if you want to kind of figure out what's going on,
right,
you kind of want to say, hey, if it gets to this market cap, what will the coins be worth? So you take the market cap and divide it by coins in circulation, or all coins total, really, because some of these coins don't have circulating coins. The company holds them, but it still counts according to market cap.
Right. Yeah.
So we're talking about Tezos. So Tezos started with $273 million roughly, or $250 million ICO. The total amount of coins is a lot, okay? So people think that, yeah, Tezos is going to 200 or whatever, right? That'd be nice, but it's a little bit really unrealistic. You got, I can't remember the exact number. I'd have to pull it up on my phone. My phone's dead, but if you want to look it up, I think it's, what was the number?
I think you said 700 million.
743 million coins put in the ICO, okay?
Okay.
So let's just say market cap doubles. So when we talk about 273 million, we talk about 500 million or 550 million market cap. Mm-hmm. And then you divide that 550 market cap, divide by 743 million, and you're talking about maybe 80 cents a Tezos, roughly, is what we're talking about.
Oh, okay.
So let's talk about more realistic things that have happened in the future. Mm-hmm. I mean, in the present. We've seen Monero, which is XMR, go from around 500 million, 600 million market cap to about 1.1 billion to 2.1 billion in a matter of 3 weeks.
Wait. So break down Monero again in round numbers, using round numbers.
All right, Monero is a cryptocurrency.
No, you're fine. But it went from 350 million, or where?
It was about 5, 6, 700 million, roughly in that range.
So we'll say 600 million,
and it went up to almost double. So it went up to like 1.1, 1.2 billion.
Okay, 600 million to 1.2 billion, and it did this in about a week.
About a week. He said it hit about roughly 800 or 900 million. Then it kind of shot up right after that.
Oh yeah, okay. So it was a double bump.
Yeah.
And this is the way that they go. So in this situation, it went from 600 to 900 to 1200 in about a week.
Yeah, and it went pretty high. And then it even went up even higher after it hit the 1 billion. It went up to 2.1 billion.
You're kidding
after
me.
it hit the 1 billion market.
When I bought it at $80. I bought 20 of them, and then it went up to 143 bucks a Monero.
You had enough balls to buy it at 80. That's good.
And
80 was the normal price, wasn't it?
It was roughly when it kind of bumped up.
Was this more for fundamental reasons, or because like the Korean
spread.
exchange?
It was the whole cryptocurrency spread. People are buying it. It went to BitThumb, Binance. It went to a couple exchanges that it wasn't on, and that happens. If you see a coin in Reddit and the post says 1 hour old and it says, "Hey, this shit's going to another exchange," guess what?
Boom,
you might want to ride that motherfucker.
You might want to ride that motherfucker. Mm-hmm. Okay, so you're saying what caused Monero?
Knocking. Oh, come on in. It might be my guy. Hey, what's up, man?
Yeah, cool.
Nice to see you.
Hey, how's it going?
This is my friend. He works for Covenant.
What's up, man? I'm
How you doing, Barrett?
Good to meet you. I'm Sean.
My hands are a little.
Oh, go ahead and sit down on that one. We're just discussing.
And what can I get you to drink? Would you like a beer? Or
you want a beer or you want a water?
Okay. We got Coke, we got food, and we got beer.
Chicken and salad and stuff.
I brought that from my work, chicken salad stuff.
So just so you know, this is on camera. So you know.
Okay, just to put that out.
Yeah.
It's nothing bad.
No.
It's only for people who can't make the meeting, basically, and other people who want to follow.
Yeah. It obviously just don't say. I mean, granted, we don't worry about it, but
we
don't
don't
say
say
anything
political stuff and racist stuff. We don't do that. We're all like not like that. So
say what?
Yeah. So in general, we're talking about Tezos. We'll get you up to speed in a second. Tezos, we're talking about market cap. So people are like, Tezos is going to get $40, okay?
No, that's crazy.
I know, but when we're talking about Tezos getting up, if it can get... Okay, go ahead, Kelly.
Well, actually, do you want to do any, like... Well, you want to... You go ahead first.
Okay, we're going to talk about this in the
Yeah, that sounds good. Yeah, let's stay on subject and then go
So
intros.
when you have
Yeah.
Tezos and
That's a good
everything,
point.
we're talking about what's the price we want to sell. We already own it. What do we
Right.
want to sell, and what do we think a market cap can get to?
Right.
If
This is the good question.
And
This
then-
is the good question.
And then this is where we're doing like kind of an after action review.
Right.
Because a few times we were like, oh, we got caught up in the kind of.
military. You are.
Yes. You know what
We-
after action review. You got a head start on the rest of us.
So we're doing after action review on like what happened in our other things. Like, okay, so we bought Ethereum around 10, 15, 20, 30, $50. We bought a lot of Ethereum. We saw it skyrocket. We kind of got excited, you know, kind of peed in our pants a little bit. We made a lot of money, but we really didn't do what was pertinent at that time. Start calculating market cap divided by how many coins are there and what we should sell at.
Mm-hmm.
So we lost some money. There was some money we should have sold at 400. If you know the high price, yeah, you sell at the high or low.
Yeah.
But we could have sold at a decent price and made some money and bought
Yeah.
back and almost doubled our investment.
Yeah. So when you look at this, like the aftermarket stuff and stuff like, so Patrick's point is exactly right, which is we know that it went to 400 and we know that we could have sold it. In hindsight, we know that we could have
it's
sold.
completely-
Yeah. In hindsight, we know that we could have sold at 400 and bought it back cheaper. And how much cheaper? Well, as cheap as about $160 at one point. So the question is there some way that we could have known that 400 was like way more than the 160 and we could have used some leverage in there? So you might end up saying 320 to 400 was the good sell point, and then the good buyback point was 160 to 250 or something like that. But you can't just say, you don't want to be overly critical and say that we should have known exactly 400 or exactly 160, but you can develop ranges.
Yeah, and that's
in
what
these
we're trying to
things.
do is look at market cap for Tezos. What do we think is a reasonable market cap?
And the current market cap is about 400 mil.
Yeah, we're going to believe it's going to start out $400 to $500 million.
Yeah, still in the futures market. So
in
it's
the
kinda
futures
speculative.
market. It is on the futures markets, it's way higher than that. It's
Yeah,
at
on the
something
future
ridiculous.
market, it's at like 2 billion.
Yeah, 1 or 2 billion. Yeah.
Yeah.
So
Mhm.
it's trading at 200,000 transactions 24 hours, which is great. Which means we know it's going to be picked up by a lot of the trading markets because they want that money. Because every time you trade, they get money. So nobody wants to be left on the dust in these trading markets of not making money.
Right.
I believe.
Right.
That's why other trading companies pick up coins. Why? Because they look over here and they say it's being traded, 3 million got traded today. Well, they want a piece of that 3 million market, even if they're making a penny off of it every trade. So we think Tezos is going to be on a lot of markets when it opens up. The question is, how high can the market cap go? We know it's not going to go higher than Ethereum. Ethereum market cap means the amount of money total in it, and then you divide that by the coins, and then that gives you how much money per coin.
Yeah.
So that's our math and we haven't kind of done it this way very often because we kind of get caught up in the excitement, which happens
in the
in crypto
dollars.
land. Yeah.
No problem.
No problem. So what we're going to do here is when we talk about this, where do we think Tezos market cap can get to? 2 billion is not too unfetched.
No,
right?
it's not at all.
And we're talking about
So-
$2 or $3 at
So
this
Barrett,
point.
do you know the general scope? So Tezos will probably start off around 500 mil. Ethereum's 30 bill.
30
Bitcoin's 70 bill.
70 billion.
So we can say that Tezos will not get to 70 billion.
Yeah.
Let's just say.
Where did they start out though?
Where did Bitcoin and Ethereum?
0.
Yeah.
They all start out 0, but
Well,
they're the masters. They're the bottom.
They
top.
effectively all start at like 10 million or
Yeah.
something.
Yeah.
But like for a good way to think about it is Ethereum 6 months ago was about 900 million. And then maybe a year ago is 500 million. So Tezos will start off, and then another way to think about it is Neo, which is like more recent and more relevant. Neo was about 300 million 2 months ago, and it's now at 2 billion. So you can, in terms of dollar escalations, and this is where people don't understand how quickly these quote unquote market caps, because they're not true market caps. They're represented as market caps. They're not really. But people don't quite realize how quickly the market caps can change. And Neo, for example, went from 300 million to 2.5 billion. in about 2 months.
Mhm.
So so Tezos will start off higher than Neo did, and I mean you can't predict where it'll go in the future, but it very well could even start off at 2 billion, maybe, and it very well could get to 2 billion or 400% return in a couple of months, maybe, like Neo did. So it's really hard to. It's not. You can't gauge it in the same way that you say something like, how much will this beer cost tomorrow? This beer will cost roughly the exact same tomorrow. Then damn cryptos go crazy.
Yeah, they're much more volatile for
So-
sure.
Sure.
So what we're saying is we want to try to pinpoint a price range, $1 billion, what we think it can go. With FOMO, this is the whole other part with FOMO, is the amount of coins that are out there are the only coins that are going to be out there at the very beginning. Because none of this proof of stake will be put into place, okay? So I think at the very beginning you might see a really high market cap plus there's not that many coins, as many coins in circulation because the founding people hold 30%.
Right.
That's why we're
Yeah.
saying it could go up higher than market cap. I mean, that's what we're saying because the market cap is all circulating coins. So that's when, remember I told you that important date on October 15th that
Or
Neo is going to get
The
released.
developers, yeah.
Developers get to release their coins. So now that 50 million in circulation, even though the market cap is that high and it prices it per coin,
Yeah.
it can go up higher in coin because the databases work like this. Here's the supply and here's the demand. If more people buy than there is, then the price goes up.
Yeah.
Does everyone understand that? So if there's 50 million coins in circulation and people want 60 million coins, the price will go up, even though, and the market cap will go up. But even though that, it gets divided by the 100 million coins. Does everybody understand that?
There's more out there to be bought.
Yeah, there's 50 million here. There's 60 million want to buy, right? But what I'm saying is, well, let's do it easier. There's 10 million coins being sold. There's 50 million out there.
Dollars worth of gold.
$10 million worth of coins. People want 20 million. So these people with 10 million are going to start selling more coins at higher prices to match.
Okay, yeah. Here's the way that I express it, even though it's similar.
Yeah, it's fine.
Yeah. So the blockchains, they have their expenses, which Patrick brought up previously, which is these miner bonus or equipment rentals. And for Ethereum, the equipment rental expense is $2 billion a year at the current time. So
Do you like saying that?
Yeah, I
like
that
that keyword.
I like it. And so $2 billion of new money can come to Ethereum. New investor money can come into Ethereum without having any positive effect on the price.
No price increase because that's the amount Ethereum created.
Yeah,
So,
that's the expense it has per
$2
year.
billion
gotta
dollars
cover that, yeah.
divided by coins, and it's the same amount of coins
Mm-hmm.
that equals the $300 price.
So then if $1 billion of new investor money comes in, but the Ethereum people need to sell $2 billion worth, then obviously the price goes down because they have to sell it until it goes down and new money won't keep it flat. And then likewise the reverse comes true. But now the reverse becomes a little bit funny. So if you got $3 billion of new money coming in, and you have $2 billion of Ethereum expense, so you have $1 billion of new money coming in, and we'll say it's at the price stability point, which effectively means there's nobody who wants to sell and nobody,
At
aside
the same price,
this 1 billion want to buy, but nobody cares to sell at the same price. So then you must incentivize profit takers, or portfolio reallocators. They're one and the same. Portfolio reallocator is the financially correct term. Profit taker is the simplistic way to think about it because it's effectively the same. So if Ethereum, and then you look at the way I like to do it, because this will give you a very good, accurate history of the coin holder mentality. But Neo is a great example right now, which is over the last 2 weeks, everyone who's bought Neo has paid more than $30. So at the $29 price for the people who bought in the last 2 weeks, there's no ability to take profits there. But like something like Monero, conversely, only the people in the last 3 days paid more than $100. Everyone else paid 80. So you might find more profit takers at the 110, 120 prices. So this 1 billion causes the price go up. Now,
Yeah.
in terms of market cap, this is where it gets funny. The 1 billion will not like it won't change the market cap from 10 billion to 11 billion. The 1 billion will change the market cap from like 10 billion to 20 billion. It's vastly more. And the reason is because the speed at which this money comes in. If the 1 billion was spread out over the entire history of the coin
Correct.
and life cycle of the coin, then it would create a perfect $1 billion increase. But if it's spread out over 24 hours, then it will create a $100 billion increase.
And that's what we're talking about when these people are holding 50 million, let's just say
Yeah.
these 734 million coins of Tezos. 30% are held by these people over here.
Yeah,
okay?
yeah.
So that's not even in circulation. They're not even going to sell it. So what can happen if 1 billion comes in? The literally, he explains it like in a term that the market cap goes up by 20 billion, correct? But the supply and demand curve goes like this. The supply starts to go down, the demand starts to go up, which when they cross, that's when people sell, right? And that's kind of supply and demand curves. They go up and they cross,
Moving it up.
and they keep moving it and moving it.
And a good way to think about the supply and demand curve, and that's right, is basically the life cycle at which people bought.
Yeah.
So Monero, which is the most interesting one at the moment, I might say that 90% of Monero holders bought Monero at $80
Or less, 50 or less.
or 50. Okay,
Yeah.
50 there. Thank you. So maybe 90%, and this is a wild guess, but maybe 90% of current Monero holders bought at less than $50, and maybe 10% bought at like 100. What's the current price?
130.
It was, but it went way down again because
Okay.
people sold. Like
So
you
we'll
said.
just say $100.
Yeah, it was 100. Yeah.
Yeah. So maybe 90% bought less than 50, 10% bought at 100. So in terms of Patrick's supply and demand curve, there's a very like big demand at the 50, and in terms of the 100, it's only 10% of the Monero holders. Yeah.
Yeah,
That's
so-
the most recent price paid for,
Yeah.
and that's what determines market cap, right?
Yeah, only the most recent price. So
Recent
if you
price
did
paid
$1
for.
billion in one day, and you're willing to pay $3 million a coin,
And that determines
It
market
creates-
cap. So that's where you can get the $1 billion coming in right now can increase the market cap a lot.
100 billion.
100 billion.
And,
So-
and kind of
yeah.
make it in a simple example, if there's 101 coins out there and you bought 100 of them at $10, and I come in and pay $100 for that last coin,
Yeah.
boom, even though you bought 100 at $10,
Yeah.
I paid the last,
Yeah.
I bought the last coin at $100, the market cap's 100 times 101, not 10
That's
times
yes.
101.
That's exactly
and
right.
that's why we're talking market cap. So
And
this
you-
is
you
what
follow that,
happens.
So it does get a little deceptive.
So that's what happens when we divide the market cap divided by the coins is the last bot. But usually with a large volume coin, it is somewhat more accurate than the
Like
101. It's
Yeah, it's going to be much more scary.
it's much more accurate than the 1 in 100. But you can
I'm a
also,
schmuck for paying
I'm
100
going to
on
tell you
that.
this. I'm going to tell you this. People try to trick fuck you with this.
yeah, they do.
People will start buying at a high price and driving that market cap way up and the price of the coin up, and then they start selling, and that's the pump and dump
Or
theory.
something like this,
That's
yeah.
kind of the pump and dump. We buy until that gets way up there, and then other people start jumping on the train and start sell.
I'm gonna turn that AC
That
on.
market, yeah, I was going to tell you that, man.
Yeah, sorry. I
Rain.
turned it down.
So
but-
our biggest thing about Tezos is, what do we think it can get to with the market cap? If a lot of money comes into Tezos right at the beginning, that market cap can skyrocket. Let's just say $1 billion comes in a day. It can look like it's a $30 billion damn coin,
Yeah.
and that's what we're talking about. So where
Like, so when do we
Yeah,
sell into
I'm with
Tezos?
you.
So this is the way I think about it, even though Patrick and I have a slightly, but it's tricky. It's tricky.
it's all tricky.
Yeah, it's super tricky. So let's pretend, just for talking purposes, Tezos comes in at 500 mil. So in terms of the long term, and what is long term? In crypto world, we sort of say long term is 3 months. Now,
It's forever to wait. Are you
Yeah,
serious?
3 months is crazy amount of time in crypto world. So in terms of market, all investors have certain rates of return that they desire to get. There's the minimum rate and then the maximum rate or whatever, optimal rate.
Mhm.
So in crypto land, your optimal rate is 300% every 3 months. That's roughly your optimal. And then the minimum that investors are willing to get in crypto world is roughly 50 to 100% a year.
Yeah.
So between 100% a year and 1,200% a year, those are the the pro investors get 1,200%. The hodlers, the maximalist coiners, they get 100%. So they're both great. They're both great. But this is what market people demand. So with Tezos, if Tezos comes in at 500 mil and it goes up to 1.5 billion within a short period of time, which we'll just say 3 months or whatever, then that will satisfy the let's call it speculator or whatever, but pro investor. This will satisfy the pro investor's rate of return, and he might cash out. And he also says to himself, well, it's at 1.5 billion. He doesn't care if it goes to 2. His question is, will it go to 4.5? And like, though we don't really know, let's just pretend we know that it's not going to go from 500 to 1.5 to 4.5, and then to like, let's just take it further to like 15 billion within like a 3 month cycle, or at least Ethereum sort of did do that.
Yeah.
But I mean, this is one of those.
It's one of the only few.
That's the unicorn. As
it's very rare. Like most asset life cycles are nowhere near like Ethereum's, like 20x.
And what we just it's like crazy.
Ethereum is crazy. Yeah.
So what we're talking about is
when do we want to get out of Tezos?
Yeah, the reason is to get out of Tezos, and that's what we're talking about discussing. This isn't a final decision.
Oh, sure.
It's kind of one of those
it's a fluid.
Yeah, everyone should do some research on it. We all got some.
And you got to get their calendar, and you got to look at their production cycle. You know, when do their next release come out?
And
do y'all know when developers? What's the supply to start out with? I guess.
I told you that. That's 743 divided by 30%.
Yeah.
Okay. So 70% of that's available immediately.
Yeah. Okay. So what we're talking about here is, and I'm going to tell you this is the other part that could drive up the price really fucking high, is if investors do what a lot of investors I think are going to do, are double down on their investment.
Right.
Immediately.
So this is where the practical mechanics of the market come into play.
Yeah.
So in terms of practical mechanics, and I'll just say Bitcoin for one example. So everybody who's considered buying crypto ever, they consider buying Bitcoin. You'll always consider buying Bitcoin before you consider Ethereum, and you'll always buy Bitcoin before you buy Neo, because you just can't even buy Neo for cash. You must buy Bitcoin first, and then you use Bitcoin to buy Neo. So in terms of like
the old Bitcoin paradigm,
the crypto dollar. So in terms of like
son of the universe.
So in terms of the like the new demand for Bitcoin, the public, the general public has demand for Bitcoin. There's virtually no general public demand. I'll just say Neo as a reverse. There's virtually no general public demand outside of China for Neo. And then so who buys Neo? Well, it's people who bought fucking Ethereum and Bitcoin. Now then the question becomes, you know, are these people intelligent investors? What's the quickness with which they move money? You know, does our product appeal to people who are I will call it well versed in Bitcoin and Ethereum, because you're starting to talk to a more educated, limited pool, whereas general public is completely uneducated in crypto, and they're just going to put 5,000 and let it sit and see what happens or whatever. Whereas the people who've already bought Bitcoin and Ethereum, and you're trying to convince them to surrender their Bitcoin and Ethereum in order to obtain Neos, well, then you have to make a different kind of marketing or a different kind of appeal. And then in terms of Patrick's point, so general public, when they buy Bitcoin, they're going to buy Bitcoin with amounts of $200, $500, $1,000, $5,000. Let's pretend. So when Ethereum and Bitcoin holders buy Neo, they will buy with amounts of $50, $100, $300,000, because they already have, let's just pretend, $1 million in crypto land. It's very easy and reasonable for them to move 300,000 over to Neo very quickly, whereas general public will just do $5,000 at a time. General public will do small amounts because they're uneducated investors.
All right.
You follow how that works? You kind of agree with that? Do you agree with that logic? Barrett's quite a good business guy, so when it comes to you know, business analytics and like market predictions or whatever, like how markets work, Barrett understands that stuff fairly well.
Well, I mean, what you need to know is how many general public investors you have versus how many
Educated.
educated. Or,
Yeah.
or
So
big
in NEO,
stakeholders.
you have no general public investors,
Yeah.
or maybe 5% at most, and 95% are educated investors in NEO.
So the price to fluctuate quickly is
Well,
what-
it could fluctuate quickly, and the movements are going to be larger and more sudden. Whereas general public will go from like 5,000 to 4,000 to 8,000, educated investors will go from 300,000 to 2,000. They'll just take it all out or all in.
Yeah, they're going to be very quick, and it's probably automated a lot of the time. So
Yeah, and that's, I
Stuff
mean,
like this.
and that's what happened, right? Like as soon as
Some-
a bunch of people were coming in,
Yeah.
and then it
A
hit.
news article hit is what happened. Really.
And news articles
What was the
and
news
stuff.
article?
About the Chinese.
The Chinese are
ICOs.
possibly shutting down all ICOs.
Yeah,
Oh
the
yeah. Oh,
government might
that's
ban
what caused the dip.
ICOs.
Yeah.
On
Well,
the-
I was saying on the
probably.
front end, the rise.
Oh yeah,
Oh.
right. Yeah, on the rise is a variety of things.
Yeah.
But their new beta release, if you wanted to like pin it to one external factor, their beta release is the most relevant piece.
What
The
was
transition to
what-
NEO and that conference, right?
Yeah,
And,
the
it's-
conference.
And that
and
conference,
it became
yeah.
available on new exchanges, right?
Actually, not at that time, or not that I.
I,
No,
I think
I
it was
don't-
already out on.
It was
convention
already out.
series,
What
maybe.
happened was a lot of news articles came out. NEO is the next
Well,
Ethereum
yeah.
to China. Then they came out with the beta release at the same
Yeah.
time. Then on top of that, they're
Their
like, we're gonna
Japanese
do
conference.
we're gonna do ICOs on NEO, and then
Yeah.
ICOs are accepting NEO, and then
They finally started marketing it at these
Yeah.
conferences
So-
too.
Yeah,
So it-
that was their first marketing event,
Yeah.
but it's because of their new beta.
So it had 2 or 3 indicators,
yeah.
and those indicators are what the smart investors are looking for.
Yes.
And
The
so-
time investments. The
And
time investments.
And I feel like it's a huge multivariate equation, and the more like positives you get, the more likely it is that you're going to invest. Like,
Even though it is, there are a bunch of variables. Like
Mhm.
I'll just take the beta release. The beta release is the reason that they decided to have marketing events in the beta
Correct.
release and
it's
the
the
marketing.
more important one.
Well, and it made the news articles.
Yeah.
You're correct. Okay, but let's just pretend I have a beta release,
Mm-hmm.
but there's no news articles, and I do no marketing on it. Yeah. Okay. This will create less impact than if I do all the things right.
correct.
Right, nobody
So-
knows about it. Yeah.
So you do have a point on that. Just like there's usually, I'm not gonna say usually, but sometimes there's one like driving force or whatever.
Yeah, one's bigger than the others, and I'd agree that
All
it's
right.
the NEO.
All right, so we'll stop. I'll introduce myself. My name is Patrick Kelly. I'm a wound care nurse. I got into crypto maybe, what do you say, Keller? A year and a half, 2 years, maybe a year and a half.
Oh, like seriously about a
Not
year and a half.
seriously like a year and a half, but like I was always dabbling in the shit because I was like, hey, this is kind of interesting.
I think he was into crypto like.
I was
well,
buying Bitcoin and
Hey,
doing
I'm
random
almost,
shit
I was
all
about
the
to say
time.
before Bitcoin even started, but yeah,
Yeah,
no,
it was like
that's
always-
not possible, Drew.
Yeah, it was like
but
always dabbling.
We've been talking about Bitcoin since it first came on the market.
Yeah, when everybody.
We bought Bitcoin when it was $1,200, 4 years ago.
Yeah, when it got out high. So, go ahead, Keller. Go ahead and introduce yourself.
Oh yeah, my name's Keller Barnett. I do accounting and finance. Been working with the blockchain area and just studying it, and I'm hoping that together the group of people coming to these meetings. One, we've already been making some pretty good money off some things, and then we're thinking that from learning and discussing with each other, we'll make even tons more.
And
plan,
the
man.
real deal, even though Keller says ask them money, it's really knowledge sharing. We're getting
Yes,
a lot
it
of
is knowledge sharing. It's not.
short
It's not
term
direct
Yeah.
investments.
Yeah, go ahead.
Hey, I'm Aaron. Aaron Brown. I'm a BMDI specialist at Covenant Hill.
Okay. And he's just new to crypto, but he was very interesting and he wanted to help out. He also does some work in databasing and also some researching, so we're definitely going to lean on Aaron for some of that kind of skills. And go ahead, Sean.
My name is Sean. I am a IT consultant and various biking vagrant, and I live in a van down by the river because I've invested all my money in crypto.
My name is Barrett Leslie. I'm here to learn is the main thing, and slowly invest. Yeah,
And
And you're a businessman.
You're an entrepreneur.
Yeah.
I would just call him a businessman.
I say businessman. I'm a
Okay.
Yeah.
Well said.
Hey, and so let me just go back.
Yeah, go
so,
ahead.
so for the interview portion of the event, What do you know about Bitcoin?
Not too much of anything, really.
Have you heard of Bitcoin, or when did you hear of Bitcoin? You know?
Maybe at the beginning of this year.
Yeah,
Looked
getting into it.
and it just kind
Is there anybody in your family who's into Bitcoin? You going to talk them into it? No,
Depends on the information you give him.
I'll just play it.
Depends, yeah.
I'll just play it. So,
Have you heard any other cryptocurrencies besides Bitcoin, like
I
Ethereum?
know, right? Have you? No.
Okay.
Yeah, most.
You haven't heard of Bitcoin?
Basically, Aaron's gonna have to
Most
come to
people
my
don't know what
house.
crypto means
and
or blockchain.
Aaron, you're probably gonna have to come to my house, and I'm gonna have to sit down with you for a day and give you a whole day
Yeah.
crash course.
Right. Yeah.
And
There's,
then
there's,
that's
there's a
cool,
candle he
right,
burns,
resources, too.
and once the candle's out, you're free to go.
Yeah,
but
you're free to go. But before then, you're not.
you gotta wait till the candle. But yeah, so Bitcoin, blockchain, right? Now a lot of people, and I will just call the philosophers for loose purpose.
Okay.
But the philosophers, they have a lot of debate on what's the purpose of crypto. Is it to decentralize? Is it to stop oppressive governments? Is it to give people more choices? So these things are possibilities. But then there's the more practical aspects of crypto. And in terms of the more practical aspects, crypto is an excellent storage of financial value, and I'll just kind of call it financial value. But it's an excellent way to transfer, like let's call it $100 from Knoxville, Tennessee, to Shanghai in 20 minutes for a fee of 50 cents. So these things, this is one thing that nothing else can do in the world. There's a lot of things in the world that can be decentralized or give people choice or break down governments, but there's nothing except for crypto, which can transfer $100 from here to Shanghai in 20 minutes for a 50-cent fee.
And what
There's nothing else.
And
that
what
can
we're
do that.
and what we're talking about is when we talk about changing money internationally. There's people who do this, and they do it all the time in big businesses. Okay, so usually you get a good from a company. Let's just say we're getting rock from China. Just as instant, I'm buying a bunch of rock or ore from China. I need to pay them $1 million. Well, what has to happen is you have to have lawyers, you have to have escrow, you have to have goods, you got to have insurance, you got to have all this stuff put into the process, and it doesn't happen quickly. The goal is to make smart contracts or contracts that allow this to happen by gathering information from the real world, like maybe a tracking device on the ore. So the ore is tracking and you see it coming, and the blockchain's like, oh, the ore's over here. So I'm going to pay a certain amount of money because the ore got there, right?
Yeah.
And then the ore is traveling across the and on the ocean. It gets to the United States, it lands in port, right? Then it's like, I'll pay some more, and then once I hand it, then the government sees, or I mean, not the entity sees where it is, and now it's there, and now this tracking device or whatever, the blockchain gathers that information. This is future stuff. But it gathers that information, it pays the full cost, you've got all your ore, the money's been transferred for a very, very small fee. That's what we're talking about. I mean, that's kind of,
like that, yeah.
there's simple ways of explaining it. That's a very, very simple way of explaining it.
Yeah, but
that's things that may be able to do in the future.
Yeah. So do you kind of feel that explanation, or have any question
And
on that?
I'll add to it real quick from a
Yeah, go ahead.
database perspective. Basically, the blockchain is a decentralized ledger, and everybody's got the copy of the database. In like the client server, basically format that we're probably used to with databases, there's one centralized database, and you remote into it from multiple clients, and you can access that centralized database. Well, with Bitcoin, everybody's got a copy of the database. And so that's what he's kind of referring to about the decentralized nature of it, the avoidance of sovereign governments. And that way, like, one government can't just come in and say, all right, we're tired of Bitcoin, we're chopping off all these. If they shut down all the computers in one country, all the databases in the rest of the world are still going to run. People can still connect to those instead. And so it's kind of hard to chop it off or cancel it, and you really can't interfere with it.
You can't
Yes,
DDoS attack
so,
it. You can't.
so that is a fair point. You can't interfere with it. I'll just say me personally, in terms of like sovereign government stopping it, that is true. However, I might suggest that maybe they don't. Maybe they already bought a good portion of it. Maybe,
Yeah,
So a lot of people will they'll project these ideas that.
I would.
Yeah, a lot of people will project the ideas of I'll just say Ethereum, that Ethereum will destroy the cruelty of America or something else like this. But Ethereum sells for $32 billion for all of it, or whatever. So there's a good chance the American government could have afforded to buy a good chunk of it.
Yeah,
You
the
know?
Fed could snap by up 90% of it tomorrow.
And then-
They could buy
anybody
90%,
that's
yes.
willing to sell
And
it.
the last
yeah.
thing we're talking about, I explained to Barrett. So we have coins that are platforms, which we talked about earlier.
Oh, this is an important part of.
Yeah.
Oh, okay. Well, so in terms of this dollar value thing.
Yeah.
So this is the one thing that blockchain can do and nothing else can do. Blockchain can do this dollar value transfer thing. Nothing else can do it in the way that they can. However, there are it can do other things in addition to the money transfer. And one thing it can do, just for simplicity of talk, it can create this like Windows-like program in which you can put code on top of it. So now rather than transferring dollars back and forth, you're transferring Excel functions or database queries, back and forth. So this requires a bit of different level of thinking, but it's similar technology.
Yeah.
You can program conditions into it.
Yeah. So you
Instead
could go ahead, Sean.
I was just gonna say, like, instead of sending $100 directly to Patrick, I pay Patrick $100 when he treats my wound. And so the math and the cryptography can say, all right, when this wound is treated by Patrick, then Sean's wallet is debited by $100.
Or in the end also, you can say rather than sending $100, I'm sending a request to look at Yahoo.com. Show me what's on Yahoo.com.
Yeah.
So this is the difference between the platform type of stuff, which basically mirrors a web page, a web browser, but for crypto, it's GUI looking, versus the dollar transfer stuff, which requires there's nothing more to do with dollar transfers. It's figured out.
So the way Patrick explained it to me
Yes.
is you have Bitcoin, which is like a currency,
dollar transfer, yeah.
and then you have things like Neo
Mhm.
and
Ethereum.
Ethereum and things like that, which are platforms, essentially like an operating system.
Yep.
And then on top of that, they build things called
ICOs.
DApps, decentralized.
and
apps.
so those are just like applications in that operating
Like
system.
Excel and Word and
Right.
QuickBooks. Those would be the dApps.
So what we're doing is right now we're in the beginning form of this. We're
Yeah.
operating in DOS right now. So
Right.
Ethereum
It's
is in like
effectively
DOS
DOS.
mode.
Yeah,
Yeah,
what's
DOS
that?
So we're in
Right.
DOS mode right now. So if you imagine getting into the computer industry when it was
Buying
DOS
percent of
mode.
ownership of all DOS.
So you're buying DOS application, and then on top of that, so they still haven't really implicated user interface. So that's what these DApps are going to do is when you have a DApp on top of it, it's going to be run on Ethereum operating system, but it's going to have a user interface. So we're going to have a user interface where I can get on there. I'm like, hey, I want to pay for this cupcake, and this DApp right here is paid money on the Ethereum basket. I own these money coins, so I own the coins, and I'm like, hey, cupcake, pay for it, and it's run on that user interface. Pay $5. And then it takes $5 of this token, these other DApp that we've also invested in. It takes 5 of those tokens, and then I pay for that cupcake, and I'm good. But that transaction will still be recorded on Ethereum, that DOS network. But
Yeah.
it'll be on that user interface. So we're still at the DOS era of Ethereum, and we're still on these DApps aren't even made yet.
Yeah, so this is
So I can't go to Starbucks and buy it.
not yet.
Not yet, but
quite
we're
yet.
hoping.
No,
Maybe
but
if
soon
you go to the
10x.
right one. You
We're
might be able
hoping
to go to the right
10x.
one.
You might be able to
So-
buy a Whopper in Russia. But
Yeah, exactly.
So effectively, there's there's the Bitcoin, which is just the old boy, and then there's all the platforms, which is like buying a piece of ownership of DOS or ownership in Windows. And like if we're to look at history, we know how well Windows has done. So you can buy a piece of ownership in those, or you could buy a piece of ownership of the Excel program, QuickBooks program, or Google program, right? And we've seen how those have done as well. So it sometimes is a debate if there's a goal of having a 100% return, which most of these cryptos will give you 100% return in a year, or having the highest optimal rate of return, which we'll just say 1200% rate of return, which is what frankly the people who are educated in crypto try to get. They try to get like 1200% rates of return. And so that's where Ethereum or whatever, well, it just sort of can't give you a 1200% rate of return.
It's too big of a market.
It's too big at this time, but maybe Excel day one can provide that, or a QuickBooks day one can or day, week.
If you
month
get in
one.
when it's in the millions before it's 40 billion,
Yeah.
you can actually
And
increase it and hit those returns.
Exactly. And then I might say that there's the fourth type of crypto, which we don't talk about too often because these become a little bit trickier. But these are what you might call like the business development or business coins or industrial
Yeah.
coins.
Mhm.
10x is sort of an example. See a
Ripple.
coin? Ripple, okay. And Ripple is what?
So I'll let Keller answer.
But no, that's fine. But these industrial coins like 10x is a good example. So whereas Ethereum has a platform, and then there's some like web browsers which are being built on top of that platform and other stuff like that. And then in terms of the industrial coins, like 10x is a good example. They are making credit cards that you can swipe at Starbucks and charge your Ethereum. They're not really built on top of Ethereum. They use Ethereum.
Yeah.
They're really more outside of the system in a sense, and they're helping people interact with it. I guess you could think about them like computer manufacturers.
I feel like
that's a
they're,
fair description.
they're connecting, the Visa, MasterCard, and traditional point of sale services with the digital blockchains, making
Right.
it so that it's a seamless interaction.
So
between the service.
the other positive is this right here. The entire crypto sphere is what? 100 billion maybe?
150.
150,
Yeah.
150 billion. The stock market we say is around
60 trillion.
60
60
trillion.
trillion, is that
Okay.
right?
Yeah.
So when we
Global
talk
stock
about
market.
we're investing in companies at the 1 billion.
US
So
or
just
global?
you just gotta if you think about it, if ever gets up to the stock market prices, which I'm not saying it will,
Right.
but we're saying the room of growth. Let's just say
Yeah.
it gets from 150 billion to 2 trillion, which isn't shit. But you're talking about you've invested at this level, and it's now it's almost 20 times, 30 times the amount. So whatever you invested, it may be 30 times the amount. The bad side, here's the bad side, because you don't want to talk about all good, is scalability. So we're talking, this is something tech should get a hold on. We think tech's going to handle this, scalability. We're talking about, right now, we're talking about transaction per seconds on these platforms. It's like 20 a second, 30 a second.
Which is just super low.
Compared to
speaking.
Facebook handles about 100,000 a second.
Yeah.
So when we're talking about, we're at this bottom level, we are speculative. We always want to mention that. Everything's kind of speculation at this point.
Sure.
That 20 a second, it will never be grabbed by the general public at this level, ever. Because you don't want to wait 20 seconds or 30 seconds for a message to somebody.
Yeah, it has to get
Starbucks wouldn't let
faster.
that fly.
Yeah.
Like Microsoft would never take off if everybody was having to buy computers that were the size of a fridge.
Yeah.
So there is assumption the computers will get smaller.
Yeah, the assumption is scalability will go up. That market cap for overall crypto will go up. So our goal as a group, I believe this is our group goal, is to gain as much assets while it's low and then spread out. I think a lot of people want to build this mountain and then spread out. We spread out like this. So we get a lot of money and then spread out. So when it does go up, if these companies die and this company dies, because the real math is maybe 98 to 97% of these companies are going to fail.
People say that. I
More than
personally
half.
don't.
More than half at least.
That could be right. I personally don't think so now. I will just say, last time, or last bubble, whatever you want to call it, last time or last bubble, like 90% or whatever, they did fail, or they are at least no longer relevant today. They still actually could be successful, and they could have made money, but they went from like 20 million to 40 million over 5 years. And now there's many that are several millions.
Yeah, and what we're saying is, if you have those 90, we have all these spread out. If we get a fucking Google or we get an Amazon type of thing.
Yeah, and in terms of like failure rate of the small guys, which I'll refer to mostly. Yeah. Because in terms of the last bubble was like 5 years ago, so everybody was very small.
Yeah.
The way I like to think about it is how big's the team, and what you'll see, kind of more than you should, is that who's in charge of this $300 million project? It's me and my wife, and we're working out of our garage part time while we sell Mary Kay on the side.
Correct.
So you kind of ask yourself, like, are these the business people I want?
Yeah.
And anybody can have one good idea, but to run a business, you need to have 100 good ideas and like 5 bad ones, but less than 100 bad ones or whatever. Yeah. You have to have like a consistency to make business successful. And so you'll see a lot of just, frankly, husband and wife type of stuff, which for business, frankly, is just not good. It's good in the short term, but not the
And
long
Risk
term.
and reward.
Yeah. But what we're talking about, Al, when you talk about 90%, I think there's around 800 coins right now, something like that.
Oh, well,
There's
sure.
over- well over 1,000.
1,000 coins. So you're
Yeah,
talking about
1,000
100
coins.
may be successful. If we're in the top 20 or 30 and only
Yeah.
buying these coins,
Yeah.
our likelihood that 90% kind
Yeah,
of goes
that's-
down a lot.
Yeah,
Yeah,
like
definitely.
we could buy the coin that's like number 900 of 1,000, but this one might have like their overhead expenses or their management team.
Smoking weed.
Well, they
Sorry.
might
There you
might
go.
have a total budget of
Rack it up.
5,000 a year, which is not enough
And what are the
to
costs?
sustain a management team. But the ones that we primarily look at, and I'm not going to say we only do this, because Bill, he'll do the small boys, but most of the ones that we look at, the management budgets are in the nature of 20 mil. So you know, I don't know what size of management team that equates to, but I try to hope that it's 10 people. I'm like, hey, do you have 10 people?
I'll pay it at $2 million
Yeah,
annually.
Yeah, that's fine. Yeah, 10 people making 2 mil annually. I mean, it's better than one guy making 20 mil.
Yeah,
You
I
know,
guess so.
and you gotta have a little stability in case someone, you know, the management doesn't go nuts.
So
And they've got a good point about like the risk to reward is incredibly high because there's not a lot of regulations and accountability with this like there is in traditional assets. Like a 40-page
No.
white paper is getting people $200 million literally, and it's
yeah,
like a husband and wife team.
But
Well,
we're talking about this. This is called due diligence. Our group, like I'm gonna tell you this.
Yeah, due diligence.
We're
Yeah,
very
yeah.
like out of the people
We
here.
try
We
to
got
be.
people working on actual products right now. We got people
Yeah.
doing research. We got
Yeah.
people in IT. We built miners,
Right.
and we've
Yeah,
done
physical miners.
Physical
The
miners.
Yeah.
He's actually seen the crypto mines.
yeah.
He's explored the crypto mines.
He's
I'm
actually. And
renting
we'll
my
talk about
security.
that. But out of the people we talk about,
Security rentals.
we're one of the like this.
Security
This he's talked to the Ethereum developers and met with them, and I mean talking
Yeah.
on the phone. He's going to meet with them. So that's like
Yeah.
the top of the top. Like people will probably shit their pants on crypto land if they met Diligence and like this is like the
Yeah,
god
he's
of
on
Ethereum.
the like last week
he's
and
super
Diligence.
smart guy.
Yeah, yeah.
About
So what we're
food and
talking
stuff.
about is he's got a lot of stuff. We talk about a lot of things. We actually go into things that people aren't even talking about on Reddit. They're just over there like, what's the price going to be at? What do you think the price is going to? Like 90% of the Reddit threads are either
Oh, this is all they talk about.
they're either putting down other cryptos or trying to find the next big thing or doing anything. But we're technically like doing research, doing math, doing
And it's
spreadsheets.
not a lot of
it's-
math on
what-
Reddit. from what
Yeah,
I've
it's,
seen.
right. It's not a lot. So like when you look at the stars and you try to explain why they're up there, some people look at them and they say, well, this is Taurus, and he popped the Taurus in there.
Yeah.
And some people say this is Orion, and he wanted his belt up there, so he popped those stars over there. And there's, you know, a dip or whatever. And then other people, when they look at crypto, they say, well, where is crypto going to go? They're like, well, this one's making an alligator. The alligator always tells you prices go up. I don't know why people do this, but they like to draw pictures with their cryptograph,
Yeah.
and then they just say up.
Yeah. So a lot of
Alligator
people,
says up.
A lot of people they'll draw a graph. And what he's saying is the price will go up and down like this, and they'll draw a picture of a bear, and they're like, "It's bear, it's bullish, it's going
Yeah,
up."
yeah, bear's going up.
Yeah, so
Science
these
guy
are
and
these
the
are
guy
their
that-
science
I
and their
don't know.
math.
Worship.
Our
They
math
get
is to
crazy.
logically think like how much money's coming in, how much
Yes.
is spent on security, how much inflation does this coin have.
Like basically
Using-
like a profit and loss.
Yeah, profit and loss using
Like
real business.
Traditional
More like-
methods.
Yeah, traditional
Income statement
economics,
stuff, yeah.
traditional math, which is 1 plus 2 1 plus 1
Yeah,
equals
yeah.
2. Instead of these people like 1 plus 1 equals alligator, it's going up.
Yeah.
I mean, this is what we
A lot
kinda-
of people do that. And in terms of like programmers and stuff, something I sometimes notice with like some people get nervous when you talk in dollars,
Yeah.
and people who get nervous when you talk in dollars, these people will well, one, you don't want these people like frankly managing your stuff.
Your
But-
business anyway.
Yeah, you don't
they
want
can
to
write
manage your
code,
business.
but yeah.
They can write code, but you don't want to manage in your business. But then, so they get nervous with dollars, and then they'll start to like avoid dollars at all costs, and they try to explain how dollars work without using or acknowledging dollars, and this becomes like really tricky.
What we're talking about is so other things that are basically so when we talk about crypto, there's a couple things that go into crypto when they start a coin, okay? So the first thing they talk about is coin allocation, usually the first thing.
Yeah.
So they talk about where coins are going. So
Yeah.
30, kind of a round number is 30% goes to the founding people.
Yeah.
and then like 20% gets held in escrow,
Yep.
and then 50% goes out to the community.
That's
Okay?
that's normal.
That's a normal thing. So we talk about coin
Yeah.
allocation. Then the next thing they'll talk about is how are you going to pay for security?
Yes.
So security is miners, which
Yeah.
is just a GPU attacking this thing, and they're like, oh, how do you do it? And they validate all these transactions. Then all of a sudden, when they validate the transaction, they like roll 1,000 number dice, and they go, okay, here
Yeah.
it is, and this number pops up, and if it's
You
below,
like the mining stuff? It's interesting.
yeah, it's cool. And then once they roll $1,000 dice, if the right number pops up, you formed a block. If the wrong number
Yeah.
pops up, you have to redo it again.
Yeah, you have to roll new dice.
Yeah, you got to roll new dice. So that's how it works. So that's why coins are only allocated. And the
roll.
reason they did the number, they have this long math problem. Me and
Yes,
Sean
Sean
talked about it,
256.
and we
Yeah.
talked about it.
No.
The math
Nonce.
problem is if the block gets formed in a certain amount of seconds, the difficulty goes up. If it gets formed in seconds above that,
Ah.
then the difficulty goes down.
Oh, I
okay?
see.
Based on the last one was found.
Then on the last one that's found. Okay,
Okay,
so
I
if it's 15 seconds, if the last one's found at 14 seconds, then the difficulty goes up. So then the next one should be found at 16 seconds.
Yeah.
Trying to keep a minimum of 15 seconds, whatever they've decided what it should be.
Yeah, so if you were to, let's just pretend the computer problem was multiply this big number by this big number, and let's pretend this took a computer a long time to do. So you want to have, one of the big things with Bitcoin, or the biggest invention with Bitcoin, frankly, is time signature. So if you have the idea that multiply this number times this number, and if I do it on my computer, this takes me 10 minutes to do, therefore my blockchain will take 10 minutes to multiply these numbers all the time. But if you have 1,000 computers doing it, then it should take far less than 10 minutes, and then your blockchain time signature no longer works. So the puzzle was, at one time, how do you develop a way that one computer trying to perform a task takes an equal amount of time as 1,000 computers trying to perform the exact same task? How can you prevent anyone from doing this faster or slower than the relative speed that you want? So Bitcoin, they wanted all their blocks made in relatively, basically 10 minutes.
10 minutes, yeah.
So, so there'll be one new Bitcoin block every 10 minutes, but it doesn't frankly matter if every computer in the world was trying to multiply these numbers together, for simple talk, multiply these numbers together, or if only one computer is trying to multiply these numbers together. No one can do it faster than 10 minutes.
And what it does is do a
Generally.
medium time. So if they
Yeah.
get it faster than 10 minutes, then the difficulty goes up.
Yeah, the next one will be a lot slower.
Yeah, if they do it really slower, then the next one difficulty goes down and the speed goes down, and then
Yeah.
the block time goes down. So that's called mining. Okay. The other way of doing it, we're not going to get deep into this, is proof of stake, where you just stake your coins. Like I own 1,000 coins, and I say hold these coins. Okay. And now I have a node which bounces off all these other ones and says this is the blockchain and this is secure. And what that means is dollars. This is all dollars.
Yeah. You're
And
using
you literally-
collateral,
Yeah, collateral. But what I'm saying in general, just for general, we're only talking general.
Yeah.
Right.
Is it costs this much money to take over the Ethereum blockchain, which is, I mean, I'm not Ethereum, but any blockchain, you have to have half of that money. So let's just say we're paying 51%.
Mm-hmm.
So if it's 200 million a month, you're talking about 10 or 20 million dollars a day, and you have to have over that much, and you have to have more nodes. So you have to control nodes,
Mm-hmm.
which each node may have to have 1,000 or 10,000
Mhm.
coins, which is worth $10 million a piece. So you're talking about 10 million times 220. You'd have to have like $220 million to make the blockchain insecure. And it just takes so much money that even if you do it, well, you still have legal ramifications, and will someone who has $220 million risk their $220 million just to fuck with somebody's money?
Yeah,
That's
so-
how it goes,
You
basically.
gotta make it risky, yeah.
So in like Bitcoin or traditional blockchain or proof of work, whatever,
Yeah.
anyone can do it.
Yeah.
So I don't have to own a single Bitcoin in order to participate and try to earn new Bitcoins.
Yeah.
And with master noding, what we can sort of think about is like Uber versus taxi medallions, but in either case. But with master noding, in order to be able to try to earn new Dash coins, they do this. In order to earn new Dash coins, I have to spend roughly $50,000 to buy a bunch of Dash. and then I have the option to earn new Dash coins.
Correct, and you'd have
So
to buy
That's like
51% of
400,000
it.
now, yeah.
Yeah, you'd have to
What?
buy.
It's like
You'd have to
400K
buy
now.
51% of
40K.
those,
Oh,
and then you
wow.
would
Dash
crash
went
your
up
own
for-
money.
It
You
was
see what
another
I'm saying?
100% as well.
If you crash their ledger, you would have to crash your own money as
I
well.
missed
Well, right. And granted, it might be small relative, but for like, let's just call it intermediate terrorism or something.
Yeah.
Like anyone can mess with Bitcoin or protect Bitcoin, but only those who have purchased Dash can either attack or protect Dash.
Correct.
But generally, if you purchase Dash, then
You want to
presumably
protect it. You want to protect your own goods. So that's
Presumably.
so the next thing they go to is governance. So governance is how is this coin going to be run?
Yeah.
So a lot of times it's not like totalitarian rule where like we say this is going to happen and it happens. Okay. A lot of times it's usually like there's different options. There's a lot of different options of governance, but we'll just explain how it works. Sometimes you just own a bunch and then you get to vote on things, propositions. Like, so when we're talking
Democracy.
about, democracy, when you talk about Bitcoin and forking and all this stuff,
Yeah, dollar to dollar democracy.
Yeah,
just
dollar
be
to
good.
dollar.
Right.
Yeah, okay.
Your votes change on how many dollars you have.
yeah, so what does
One
that
vote per
happen?
dollar, yeah.
So the big revolution was like everyone's going to have a vote, right? That's how it
Right.
started out. But now
No,
people have
that's not true at
accumulated
all.
so much dollars that it's just like regular
just
society.
bullshit. Yeah,
it's
it's
an
just-
oligarchy.
Yeah, it really
and,
is.
and you have an oligarchy, and that's not
Yeah.
what
Same
that's
bullshit.
not what they want. That's not what this thing whole was developed about.
Well, if this turns in okay.
But I'm
It-
just saying
it-
governance.
Yeah. Patrick is exactly right. But this is where you get in that philosophical stuff.
Yeah.
So, is your goal with Bitcoin? Let's just for simple talk. Is your goal of Bitcoin to reform society, destroy governments, create new governments, or is your or is your goal with Bitcoin to just transfer money back and forth?
Correct.
If that's your fucking goal, you've done it.
I can email cat videos. Why can't I email money that fast?
Yeah.
You've done it if your goal is to transfer money back and forth, but if your goal is to like reform society or destroy governments or whatever, this in one way is sort of like a never-ending problem.
And this is where we
so
talk
you'll never win that.
This
one
is where we
fully.
talk about hard forks versus soft forks.
Yeah,
these kind
hard
of
forks,
things.
hard forks.
Soft forks are like everyone voted for this, and we're all like everybody's down. So
and soft fork works with the code.
it works with the
Yeah.
code, and you don't have to change anything. So if you programmed it before, like Ethereum programmed stuff to be like, hey, we can change stuff in the future. Bitcoin is kind of like this is the way it fucking
Yeah,
is.
this is the way it is, bro.
And then so they have to do hard forks. So when a hard fork happens, if you can think of like the whole like
it's a Microsoft update.
yeah, if you think about different worlds breaking off, this is what happens. There's different worlds that break off.
Yeah.
So this
There
world
are.
breaks off here, and this
Yeah.
world breaks off here, and this is where we get Bitcoin. And then recently we got Bitcoin Cash. So now we have we have a coin that was already here, and we have a new coin that's kind of a alternate universe coin, if you can think of it, because the blockchain breaks out. This action led to this action, and these things will never come again together. So these are like alternate universe coins, basically. This ledger, after this block where it split, is its own ledger, and this one's its own database ledger, and this one's its own database ledger.
Yeah, they're completely separate at this
And then,
point.
yeah, and then when you talk about hard forks, it's usually we have to change the code, and people don't want it. Usually, they're like,
Hard forks are an increase in the rules. Soft forks are a decrease in the rules.
correct.
Yeah,
that's another.
Like computer
that's
code.
about right.
That's
Because
yeah.
if
Well-
you decrease the rules, I can still use the old rules and still
Right.
meet those criteria.
Exactly right.
But if
Yeah.
you increase the rules, I can't use the old rules and still meet them.
Yeah.
And the other
That
thing
is
is,
That's the
exactly right.
difference.
and when we talk about Ethereum doing soft fork, because they're about to do some, where they're just improving their
Yeah.
technology. So they've already written in, we're going to improve the technology. Everyone's like,
Well,
yay.
and it, just go with the hard fork, soft fork.
Yeah.
And like he's saying there, so the soft forks, a few people can do them,
Yeah.
or a lot of people can do them. It doesn't really cause a problem.
Yeah,
Hard fork, all or nothing,
Yeah.
effectively.
yeah.
You
And,
have to-
and generally speaking, all of you will do one thing, and then a lot of people will just call him some asshole, but really just any billionaire who wants to own his own crypto, he will just be like, hey, let's keep the old rules.
Yeah.
And so you have this thing right now with Bitcoin Cash, not
And-
really relevant, but it's some billionaire backed coin, and he's like, you know what, I can start my own cryptocurrency, and I can have everybody immediately involved with my cryptocurrency, and rather than start a new cryptocurrency, I'm just going to call mine old Bitcoin, or the real Bitcoin,
Yeah.
not the new Bitcoin.
Yeah.
Okay, so this is how it goes. So what happens when it forks like this? This is like a big issue. Is security now, because you have to have security on both of them, okay? Because if nobody
Yeah,
goes
forks
over to
are
this
awesome
one,
for miners.
yeah, if
Yeah,
nobody goes over to this
for
one,
sure.
the security on this system's way down. The price of the coin's going to drop to shit. But if a bunch of miners, which are the people who keep it secure, and you pay them monthly,
Right,
like,
yeah.
hey, thanks for keeping us
Yeah.
secure.
Yeah.
If they go, a lot of them go over here, then this chain is valid. And that happened recently. Bitcoin Cash is a valid chain. Pretty
But-
fucking valid. And Bitcoin's still the valid chain. And that's what happens.
So
So,
some people refer to miners as emotional units. They're a lot more dollar motivated units.
yeah, they're just
Miners
dollar
will
people.
typically go to who pays them more.
Correct.
Not based on how
Because
much
you go
dollar
to
they
you
have.
go to a website that says, what can I mine for the most money? And then it
Yes.
goes, Zcash.
Exactly. Yeah.
And then you're like, okay, I'll set my
There's no
miners
love
to
there.
Zcash. Then you'll go in the next day and go, what makes you the most money? It's
Yeah.
like Bitcoin Cash. You're like, Bitcoin Cash.
It
Okay.
just walks around.
Yeah, but it all.
Swap it.
it's kinda
I
like
think you gotta
gasoline.
have some foresight though, like and think like at least a month or two in advance. But
Well,
honestly, like if it's a
on
month
the
or
small
two
scale,
out, yeah.
on the big scale,
And what we
it's
say
minute to
for
minute.
what we
On the
say
big
for money
scale, right.
reasons is how much the coin goes up and how easily you can mine it. Kind of tells you if you're going to mine it or not. Keep security on that chain. So that
and I sometimes think of miners as you can sort of think of them like the gasoline ecosystem. And let's pretend you had to temporarily only sell gas to Ford, Toyota, or Honda, or whatever. So there is some balance based on how many gas stations are selling to Ford at this moment. Therefore, you're going to sell to Honda. And then if everybody goes to Honda, then you move back to Toyota.
yeah.
So in that way, you all make the same amount of money, but it's through effectively some market coordination by not all of you only selling gas to Honda and nobody to Toyota.
Yeah.
You know,
So
your incentive to make
so
it
when we
balanced.
talk, and the next that coin is governance, so you can look at that. So, and then the next thing you look at is kind of what are they doing with this coin? What is this coin for? Is it for currency? Is it for a platform? Is it a debt? Or is it for industrial use?
Yeah,
And then that's
right.
kind of at the end of the whole paper, and you read it all, and you're like, okay, that's a great idea. I like this coin, and it's coming out. And that's what we call ICOs, or initial public offering, same thing. And that's what we get into. But for you, the initial thing you need to do, which is horrible, I'm going to admit
just
this.
gotta
Don't
buy
ever do
Bitcoin.
this.
Just buy
Don't ever
Bitcoin.
do this.
Just buy
Don't
Bitcoin.
listen to this.
What's that?
You need to go on Coinbase.
And just buy $5,000 of Bitcoin.
And you got to buy some Bitcoin or Ethereum. And it's going to take like a week and a half.
Maybe a month. It takes
Month.
forever.
That's what I'm
Barrett,
saying.
have you
That's
ever
And they
been
charge
able
you
to
a
do
lot.
it?
Yeah.
Coinbase is on your phone.
Unless it takes you 20 days.
Yeah,
Yeah.
Coinbase is the easiest one, but it still might take you a month.
And it's not
yeah,
the best deal for.
It is. What? Go ahead.
What-
Oh well, yeah, but
And what
that's
you
true.
can do if you want to get started.
It's the best way to get started for Americans.
And what
Simply
and what
put.
you can do
Yeah.
if you want to is you could just if you could can we stop the computer?
Yeah, sure. We're gonna get into some more
Well, you
details.
can- yeah, sorry. Yeah, we're gonna get into more details,
Okay.
everybody.
Let's do a little bit of a closeout. Yeah, we'll do a closeout
Okay.
real quick. So
Yeah,
yeah, we don't need to pause it. We'll just do a closeout for this meeting.
Adios, everybody.
Yeah. So yeah, this talk was another kind of little bit of how to form a group. That, like, in terms of what we talked about today, this is a good way for people listening at home. If you want to start having your own little crypto lunches, crypto dinners with people in your community, you'll make a lot of fucking money.
Yep.
And you'll educate
And you
people.
learn